Hey, what's going on, guys? It is December 6th, Saturday. I'm out here at one of the parks near my house. Looks like they're decorating for Christmas. I'll show you guys. Got the Christmas tree up, decorations, looking pretty good. So, selling options. Can you lose money? Can you lose all your money? I'm going to tell you exactly the answer to that in 1 minute. I'm going to find a place to sit here and go over a few things with you, and I'll explain in depth exactly how much or if you can lose money selling options. All right, guys, I think I found a spot over here. Man, they are not playing around on these decorations. Look at all these Christmas trees. I think that's where Santa's going to be sitting, and then they got this huge Christmas tree. Yeah, they're not playing around at this park. But can you lose money selling options? The answer is no. Not on the options. On the stock, yes. On the options, no. And I'm going to explain it to you right now. I'm going to sit right down right here, and the number one thing you want to do is find a good stock to sell the options on. That's the most important thing. So you're going to have to do your research. You're going to have to look at the earnings. You're going to have to look at the debt. You're going to have to look at the analytics. Find a solid stock. Number one thing. That's the most important thing. Next thing, you're going to sell options on this. So you're going to want to buy this this stock. So you have the cash. You got to set a strike price that you want to buy the shares at. You are agreeing to buy the shares at a certain price and on a certain by a certain date. So the first thing I'm going to have to do, which you would have to do if you pick the stock, is pick a strike price. Okay, so let's go to the option chain here on Carnival and see what I'm going to do on probably Tuesday. Okay, so here are my choices. Here's what you got to do. You got to pick a strike price. So I'm thinking I'm going to pick, the stock is at $25.87. I'm going to choose a $25 strike price, meaning if I do have to buy the shares by expiration date, which is December 19th, if it gets to closing on December 19th, expiration day, and the shares are below, the price of the shares are below $25, I would have to buy that stock at $25. Now remember, it's $25.87 is the strike or the stock price now, so I'm going to get it at a discount. If it doesn't reach that price by expiration, I keep the premium, the deal ends, and I do it again. Okay, so can you lose? No, you're picking the strike price. You're just agreeing to buy the shares at at $25. Okay, so if I do get the shares of stock at $25 and the stock keeps going down, well, I'm going to lose money on the stock that I own, but I didn't lose money on the option that I sold because I already got the premium. So let me show you here. All right, so the $25 strike price, I would get about 65 cents for that. I'm going to sell two options. So that would be $134 in premium I would get. Okay, 134 bucks. And in agreement that by expiration, December 19th, the stock does not go below $25. If it doesn't go below it, I keep the premium. Deal ends. If it does go below it, I would have to buy the shares at the price, strike price I picked, $25, which is no problem. It's already a low price on the stock right now. I'm just going to get it at a lower price, so at a discount. So, and then on the calls, so say I get assigned and I get the shares at $25, then what do I do? Okay, I'm going to sell a call option, and the same thing. I'm going to pick the strike price and the expiration date. So if I was to sell a call right now, say I own the shares and I want to sell a call option. Well, I'm going to look over here on this side's the calls. Here's the strike prices. These are the puts. So I bought it at $25. I want to sell it and make some money on the stock. So I'm going to agree to sell my shares at, say, $28, okay, right here. So the premium I'm going to get on that is 30 cents. So if I have one option I'm going to, well, I'm going to do 2 options. So if I sold 2 options, I will get in premium 30 cents right there per option. So that's another $60 in premium. And by expiration date, if it doesn't go above the $28 that I'm going to sell it for, I just keep the premium. That's it. I keep the premium and it ends, just like it did with the puts. If it does go above the 28, they have to pay me $28 a share, which I agree to sell my shares at $28. So I bought it for $25, and I'm agreeing to sell it for $28. So I'm making $3 on the stock, plus I'm making this premium. So it's just money coming in, you know? So, okay, what happens if the stock just keeps going down? What will happen then? Okay, you own the shares, it got assigned at $25, and say it goes down to $22, okay? So you're losing money on the stock now, right? But this is a stock that you looked up and you want anyway, okay? So you own the stock that you want, and now it's gone down to $22. I always have some money set aside just in case something like this happens and it goes down, like way down. Then I'm just gonna sell more puts. And if it goes down to 22, I'm selling puts at 21, okay? Still making premium, and if I have to buy more shares, it's gonna be at 21, not at what the stock is at, 22 at the moment, okay? That's what I bought them at, okay? So it's all in your favor. You're picking the strike price, you're picking the expiration date, you're agreeing to all this. So yeah, I bought it at $25, it went down to 22, hypothetically, and so I'm $3 down on the stock. I made premium, so you got to kind of take that off the price of the stock that I bought it at. So you can lose money on the stock, but then you keep selling options on that stock, selling puts. You know, if you always have some extra money set aside just in case that happens. But you always can keep that premium coming in, even if I have the stock at $25 and it goes down to 22, I can still sell options on that. $3, I might have to lower the strike price, which I don't really want to lower the strike price lower than what I bought the shares at, you know, but sometimes I do, you know, just a little bit, you know, just to make a little bit of premium where I don't think it's going to pop up and reach where I have to sell the shares at a lower price than I bought the shares for. That's the situation you don't want to get in. That's where you would lose money, but you have to pick the strike price. So it's all up to you. You can just sit on the sidelines and not sell any options on that, wait for it to recover, because remember, it's a good stock that you checked out. So wait for it to recover and then start selling options again on it. So it's all up to you. You lose money basically if you want to, because you're picking these strike prices, okay? You can always sit on the sidelines. Let me give it to you in an analogy here. Okay, say you're buying a house and that house is $350,000 and you've checked this house out. You know, it's got a nice pool, it's on a lake, you know, so the house is the stock, the lake view and the pool is things I've checked out. So that would be like the earnings or the debt, you know. I check out those things. So you're checking out the house, you know, or you're checking out the stock, and you find this good house. So this person says to you, okay, in 2 weeks, you have to buy this house within 2 weeks, but by agreeing to buy this house in 2 weeks, I'm going to give you the house for $300,000. So the lower strike price, okay? And you know what? If you agree, I'm gonna pay your first 3 months mortgage, cash money in your hand to pay the mortgage for 3 months. That's the premium you're getting, okay? Sounds like an amazing deal. You want to sell this house for $350, and you're saying that you'll sell it to me for $300. It's worth $350, and you're gonna give me money too? Amazing, you know? So anyone would take that deal, you know? So you agreed to the terms of, I'm buying the house in 2 weeks, but in return, I'm getting a lower price on the house, and I'm getting my first 3 months mortgage paid for. But if you buy that house for $300, the seller says, and the house ends up going down to $250,000, that's on you, okay? So same with the stock. If you buy those shares and it keeps going down, that's, you own the shares now, just like you own the house. And yeah, the house is worth less. I mean, we can have a 2008 housing debacle again, and it could go down. Probably not going to happen, but it could happen. Okay, so you would lose money on the house, you would lose money on the stock. Okay, the premium, cash money in your account, just like the house, the cash money that he's going to pay for your first 3 months mortgage. Okay, so you can't really lose money on the premium or on the options, because you're selling time. You're getting premium for the amount of time that you're on the expiration date, till the end of the expiration date. Okay, so that's where you're making your money on the options, not on the stock. The stock, it could go down, yes, but you just got to kind of follow with your strike price the whatever the stock is worth. So you try to follow as best you can, but sometimes it gets away from you, and you either got to sit out on the sidelines, or you got to adjust the strike price, probably where you don't really want to. Okay, but you can try, but you know, I do it sometimes, but it's worked out for me. So all right, that explains, hopefully that explains it to you guys, because I had a few people that are like, can't you lose all your money? No, you can't lose all your money. That's the best thing about selling options, is you're in total control. You're picking the strike price, you're picking the expiration date, you're in control. Okay, so all right, well, hopefully that explains that. And you know what, my dad was in a video a while back, and I think I'm gonna go over to his house and get some of his financial knowledge. Let's go over there and see what he's got to teach us today. All right, Dad should be in here. Let's see if he's in his den here. Hey, Dad.
Hey, Dan, how you doing?
Not bad. How you doing?
I'm having a good day, thank you.
All right, I got my people with me from the YouTube channel. So
Oh,
this
great.
is my dad. We just came to get some financial wisdom from you.
I'm happy to give it.
So you were talking to me yesterday about like the market and S&P 500, how it's gone up over the years, and you know, if you want to talk a little bit about that.
The biggest problem that new investors have is they're afraid of losing all their money. I don't blame them. You know,
no.
They worked hard for it. They don't want to
Yeah,
lose
they
it.
saved their whole life, and
But if you want to give yourself a little bit of security,
yeah,
check the long-term markets. Now, over here on the phone here,
there.
whoops, we lost it.
Now we
You'll
got
have
it.
to-
Yeah, he's talking about
Yeah.
this chart here. The S&P 500. This is the S&P 500 over the last 100 years.
Now
So-
you can see the way it goes is up. It doesn't go, little ups and downs in between, but the overall direction is up. For 100 years it's up.
Yeah.
So that tells me if I've got a decent stock and we go through a bad period, if I just hold on and not panic,
Yeah.
it will come back up and it'll set new highs.
Yep.
Because it's done that for 100 years, and I can't deny 100 years worth of
Yeah.
information.
I mean, you have your ups and downs, but you're going to
You
have
always have,
certain things that happen.
but you want those little ups and downs.
Yeah.
That's where you make your money.
It's a buying opportunity.
It's a buying opportunity.
Yeah.
But you can tell, I mean, I don't care whether you go for the Dow, the
Yeah.
S&P, you know,
Yeah.
the NASDAQ. Some of them are a little shorter, but
Yeah.
this is the same in every one of them.
Yeah.
You look at the two charts, you think you're looking at the same chart
Mhm.
because it's going up the same amount of money.
Yeah.
And that should tell you this is where I can be safe.
Yeah. Oh, yeah. I mean, if you look long term,
And if you're selling options,
yeah.
you're putting down the price.
That's what I
If
was
you-
telling
if you
them.
go
I was.
out- if you go out $1, you know, you only can lose $1.
Yeah.
You know, just I don't want to lose all my money.
Well, you can't even lose the
You
dollar
can't do it that way.
because you're setting the strike price. Like if the stock is at $30
Exactly.
and you're selling a put, you're getting it cheaper because you're setting that strike price,
Right.
like you said. Or if you're selling a call and you have to sell the shares, but you set the strike price. If it's at 30, you set it at 31. You're gaining $1,
Plus, you're getting your fee.
and you're getting the premium too.
Yeah, you're getting the premium on it.
Just telling them about that.
You know, the odds are so much in your favor.
Yes.
If you know all this, then you know what decision to make.
Yeah. But some people were worried, like, can I lose all my money? Can I lose a huge portion of my money?
Not like
No. I mean,
Yeah.
no, because you're picking that. You're picking the strike price.
Right.
So you're in control of that. So you know what it'll sell at or what it'll buy at.
And if you're putting out a put, that's one thing. If you're putting out a call, you're going to put out the call at a price above what you paid for it.
Exactly. Yeah.
So if it does go up, whatever stock you have back, you're going to make money on that. And as far as that call you put out,
Yeah.
you're going to make a profit.
And
there
if it
too.
doesn't reach the strike price, you're making the premium anyway.
Right.
And then it just ends. And
Exactly.
so regardless of any situation of selling a call, you're making money.
If you use your head and do it carefully,
Yeah.
it's almost
I
impossible.
mean, you got to pick.
to
The
lose
main
on.
thing is you got to pick the right stock.
Oh, of course.
The number one thing. And then you got to pick the right strike price. You know, you can't, go in the money and, get a little, dangerous with it. You got to be safe about it, like I do.
You can't pick a stock because it's cheap and it
No.
fits into your dollar amount.
No,
now,
no.
there are cheap stocks that are very solid companies.
Yeah.
But there's a lot of them out there. The reason they're so cheap is on their way out.
Yeah.
And
Yeah, you don't want that.
They might be in an industry that's no longer relevant in this society.
Yeah, that's why I was telling them
That's
you got
how
to
you
do the
get hurt.
research.
Yeah,
you
you
got to
gotta
do the
do the
research on the
research.
stock, and it doesn't take that long. You go to Yahoo Finance and you can look up, everything on Yahoo Finance and anything you need to know about the stock.
Every stock I look at, I go back at least 10 years.
Yeah,
If they have 10 years.
yeah.
For the simple reason, if I look and say, oh, what did it do the last 6 months? Oh, look, it's been going up. But that might not be the real view of it.
Yeah.
Because if you go back 10 years, you might find out it's been going down for the whole
Yeah,
10 years.
True. Yeah.
You got to know this before
You got to
put
go
your
back
money up on the
a
line.
good amount of years. You got to
Yep.
check the earnings every, for the past few quarters at least. You got to check these certain things to get a decent stock. You can't just be like, I like whatever XYZ stock. I'm going to sell options on it. No. You got to check it out. You got to
You
do
got
the
to
research.
know what you got
You got to know what you
and
got.
what
yeah.
your chances are.
But what you were saying about the S&P 500 is it always recovers.
Always
For 100
recovers.
years, it's recovered 100% of the time, the market. So if you have a stock and it's dropping, you don't sell at the bottom.
ride it out.
You just leave it and it'll go back up. And
Right.
same with a good stock. If you have a decent stock, just wait. It'll recover. If
Yeah.
it's a good stock, it'll recover.
That's why people lose so much money. It starts to go down and say, oh, I'm going to lose all my money.
They get scared.
And they sell.
Yeah.
That's the guy who's actually losing his money.
That's where we get our money.
Right.
From the guy that's selling at the
right.
bottom.
Right.
That's where we get our profits from.
Yeah.
So,
When everything is going down and
Yeah.
it hits rock bottom, I want to be buying. I don't want to be selling.
yeah, absolutely.
Because
But-
I'll ride it back up because all the history tells me it's going to go back up.
yes, exactly. All right, Dad. Well, thank you for your knowledge as always, and we'll get back to the Saturday video here. All right?
Okay, great.
All right.
I love this little group. You guys take it easy and get wealthy.
All right. See you, Dad. All right, so got some financial knowledge from Dad. He's always got some financial knowledge for us. He could, believe me, he could do 4 or 5 hours. He's a talker, so he could do his own podcast if he wanted to. But hopefully you like that. Hopefully you like the video. Do me a favor and press that like button, share the video, and subscribe if you haven't already. If you subscribe, whenever you ask a question or anything in the comments, it'll highlight your name when I message you back, so it'll give you a notification. So subscribe so you get that notification. I'll answer all the questions I can. It is getting a little busy because of the amount of subscribers that I'm getting. One thing I ask the subscribers that are out there that really know their options and are very knowledgeable about it, which I know you guys are out there, if I can't get around to all the questions, help each other out. If you see a question on there and you know the answer to it for someone that needs help, answer the question for them if you would. I'm going to try to answer as many questions as I can But I mean, sometimes I get a lot of comments and a lot of questions. So let's all help each other out. I'm gonna let my dad know about all the comments about him and all the likes, because he's like, let me know how the video does. Whenever, like the last time he was on it, he's like, let me know how the video does. So I relay all this information to him, and he gets a kick out of it. So you guys have a great week. I'm gonna get with you on Tuesday. It's gonna be a big week. Okay, so Tuesday I'm gonna sell and roll the options, and with the earnings being on the 18th, so this option will be through the earnings, because the expiration date will be the 19th. I'm gonna make very good money. I always make good money through the options, or through the earnings. On the options. So it'll be an exciting week. So stay tuned for that on Tuesday. I'll get with you guys, and you have a great day, and I'll talk to you soon. All right, bye guys.